How's everyone doing today? Wanted to go over the midterm exam and what you might expect. It's going to be a variety of questions from the first from the first 8 weeks. Make sure on the midterm that you're really focused on the previous quizzes and the setup of those quizzes. It's going to be 20 multiple choice questions, but the key is the setup. It's going to be the same type of setup that you've expected. Okay? So let's go through some of the questions. Question number 1. A basic economic principle is that the price of any financial asset is it greater than, equal to, or less than the present value of its expected cash flow. Question 2 is looking at a factor leading to the integration of a financial market. Question 3 is looking at the regulatory structure in the United States is largely the result of what? Question 4, to understand the reasons managers of financial institutions invest in particular types of financial assets and the types of investment strategies they use, it's necessary to have a good understanding of what? Question 5 is looking at the role of risk, and when you look at financial institutions, when they're unable to obtain funding to obtain cash flow necessary to satisfy its obligation. Question 6, in our financial system, commercial banks provide numerous services that can be broadly classified, and then I'm going to give you a list of 4 and which one is not a type of service or type of banking service. Question 7 is looking at the assets of a credit union and what it consists of. Question 8 is looking at the role of the Fed in the fractional reserve banking system. Question 9 is looking at the tools of the Fed when we look at monetary policy and what can they directly influence. Question 10, major types of products distributed to groups. So you want to look at insurance. What are the major types of products when you look at insurance? Question 11 is looking at the different types of funds, a closed-end, a unit-end, and an open-end fund. Question 12 is looking at in a defined contribution plan. What is the amount contributed? The amount contributed is typically what? Of an employer's profits. Question 13. The greater probability of a market maker when you look at bonds, how does that affect the variability and the loss? Question 14 is looking at a bond and is the amount that an issuer agrees to repay the bondholder at a maturity date. What is that called? 15 is looking at the slope of the yield curve is a commonly measured in terms of what? And that's the difference between the long and short-term yields. 16, returns expected by investors logically should be related to what type of risk, as opposed to total risk. Question 17. A consequence of what type of deal is that underwriting firms need to expand their capital so that they can commit greater amounts of funds to such deals. Question 18 is looking at the type of market where orders are grouped together for simultaneous execution at the same price. Question 19 is looking at the various types of markets, secondary exchange, primary markets, and which one is a over-the-counter market where a group of U.S. government securities dealers offer continuous bid and ask prices on outstanding treasuries. Question 20. For a tax-exempt municipal security, as the marginal tax rate does what? Increases or decreases. The price of a tax-exempt municipal security will do what? Increase or decrease. So those are some of the questions you're going to see. If you have any questions, let me know, but really focus on what we've covered in the previous quizzes. I look forward to your effort.